Hi traders, this video is a carry on from the video part 2 of how I trade, which is essentially the 15-minute reversal strategy. Many of you have been asking me about when is a good time to be trading that. Time-wise, there is none in particular, but this is what I look for, and this is what I'd like for you to do as well when you're trading this strategy. It's an easier way of trading it, especially when you know what market makers are doing and when you can wrap your head around what they're thinking and then what most retail traders are thinking. Okay, so here's the best way of doing it. Turn your charts on. Click on a 15-minute time frame and jump onto any currency pair that's your favorite, the ones that you like to trade. If you can, I'd like you to be able to draw lines in to separate each session, so Asian from London to New York, and zoom out. So that's going to give you a picture of what the market makers and the market has done over the period of 24 hours. And then see in front of you, I've got a picture of what's been happening over the last 3 days or so. Okay? Now, before you guys ask, I can't give you this template. This is for Forex, one of the templates that I use at times for Forex. I like the pretty colors. But I can't give you guys these ones. At some stage, I'll put one together for you. Okay, now, as you're looking at the charts, notice how the market creates specific patterns. And then right before each fall or each climb, there is a bit of a pattern, almost like a dead giveaway. That's what you're looking for. So zoom out, take a in-depth picture of what's going on over multiple sessions. See here, this is a massive W. And within the W, there is another W that's here. That's going to indicate that the market's climbing up. There's an M here. There's an indication market's about to fall. But overall, over the period of 24 hours, here's a W, market's going to climb. Within this, you've got both an M and a W. I'd be wary, this is a multi-session setup. This overall is a 24-hour setup. There's an M within the Asian session. This is a W within the New York session. This is what you're looking for. Okay. Notice how yesterday's New York session, for a large part, the market looked like it was consolidating. What happened? The market makers made their major move during the Asian session today. So that fall happened for those of you that didn't pick it up initially. When you're zoomed in like this, when I'm having a look like this, I don't know what the market makers are doing as well. But when you zoom out and you have a bigger picture, you can say, this is why the market fell during the Asian session today. Look at this M. This is partly what formed during the London session. Here's a bigger M. Nothing major happened during the New York session. The range was only about 26 pips. That's really nothing for the New York session. So what did the market makers do? They possibly expected that most of the savvy traders would have been expecting a major move during the New York session yesterday because it happened the last 2 days. Okay, what did happen this time? Nothing happened here, but the move happened during the Asian session. When you have a better picture of it, a more macro picture of it, you have a better idea of where the market may move to. Okay, now here's what I'd like you to do. When you start seeing the falls happen or the climbs happen, and then the market goes into consolidation, and for those of you that don't know what consolidation means in terms of trading, it just means where the candles are side by side. It's not really doing much. It's the market's ranging. Okay, so when you see this happen, especially after this, what this is saying is that the market has made its major move. It's been a quick one. And now it's going to consolidate. So for a lot of Forex traders, what tends to happen is they'll look for signs where the market's about to shoot up or down. They'll enter their trade, and then they'll look for signs when the market starts consolidating. If the market's moved in 2 or 3 major bursts, then chances are the market's going to come to a rest at some point, and so consolidation starts, and then at that point in time, they will exit their trades. Some of the smarter ones will probably take profit somewhere around here as soon as they see a few short bursts, just so they stay safe. But here's what's going on around here, and this is why you'd be comfortable in taking a reversal trade once the market starts to consolidate after a trend. Because what goes on is a lot of retail traders that are new to trading, what they do is they possibly see all of this happen, and then they'll say, hey, I'm missing the move. So they're going to enter a trade somewhere around here. Market makers are well and truly aware of when you take your trade, where you set your stop losses, where you take profits possibly will be if you've put one in. So they'll see all of that, and then they'll pull the brakes up. Okay, so they pull the brakes up, market goes up, reverses back. When you see candles pulling aside like this is a guaranteed sign that market's going to go back. The trend is essentially over. Okay, now market makers also know that these sorts of hammers there, I hope you guys can see that, is a sign that market is going to reverse. For those of us that are savvy binary options traders, what you can do, and for those of you that are new to trading, I'd like for you guys to demo this. As soon as the consolidation period starts and you see this formation happening, what you can do is see if this next candle after that is good enough for you to take a reversal trade on 15 minutes or so. Okay, that's one thing. That's a possible trade you can do. But what I would do is, if I see a pin bar like this, I would draw in my resistance line right at the top here somewhere. I wouldn't do it on the top or above. I'll do it just below it. The reason for that is this, that a lot of traders that took positions here, they most likely would have jumped in hoping that the market was going to push up. Okay, then here's the other thing also, that once this happens, then there possibly are some traders, and there are millions of traders out there, so the 99% that tend to lose everything, this is what they're doing. Okay, when they see this, they're possibly thinking the market's going to reverse back down again. So what they're doing is, they see this straight away, they possibly take a short order, and then they'll set their stop losses possibly up here somewhere. Okay, that's a big mistake. Normally in forex terms, you find where the higher the day would be here, and then have your stop loss above that. But what they're possibly doing is they'll have their stop loss over here somewhere, because they're thinking market's already bouncing back now. All right. What the market makers do initially, for all of these guys here that have their stop losses possibly somewhere down here, market maker pushes the market back down, triggers off their not triggers off the trade, it cancels out their trade. Then it pushes slightly back up. Now, there might be some traders that possibly think, oh, okay, this was just level 1 or level 2 of the trend up, and they may re-enter the trade, so the market makers push the market up slightly and then pull back again. But for those of the traders that thought the market was going to now retrace back, they would have had their stop losses here. Remember, what the market makers are doing now is they're hitting them. They're hitting their stops, right? Once the market maker has pulled its handbrake up in regards to whether or not it's going to keep pushing forward, and especially when they know that there are traders somewhere around here, the savvy ones that have caught hold of this move, if they keep pushing the market up, chances are that they're going to have to, there's going to be a massive transfer of equity. They're going to have to pay more money to the smart traders that got in early. And also note that those of them that did get in early, and they have their stop losses somewhere here, the market makers are not going to move the market all the way down here to cancel them out, right? So what they're going to do is they're going to trap whoever they can up here, and now the consolidation period takes them into confusion. So what's going to happen, market makers are going to keep pushing this up a few times to try and confuse people. We know that the trend is actually over. Consolidation has begun. This has given us an effective resistance point. So what you do is this. When you see this happening, the next time the market comes up and hits that point, you can trade your reversal there. Okay, possibly one more time when the market comes up, and you can trade your reversal there again. I wouldn't do it for too many times. Maybe once or twice should be enough. Personally speaking, if you're able to trade multiple sessions, remember we're only trying to hit maybe 2 or 3 really good trades a day. So don't try and do too many in each session. Possibly stick to 1 or 2 a session, maybe max. If you can do 2 during the New York session, 2 during the London session, fantastic. That's your 4 trades for the day, especially when it comes to binary. Do that, build up your trade amounts, and gradually you're making really decent money. Okay, then use that to trade Forex or whatever else. Don't do too many in a spot because chances are this may happen. Because if the market maker keeps hitting these points, what that means is there's possibly a lot of people that are putting in orders around here somewhere saying that the market's going to reverse backwards, right? Chances are it's not going to do it anytime soon because market maker is going to go back into doing its thing. It's going to wait for the accumulation of orders, and that's what tends to happen when there's consolidation like this. They're literally dangling carrots around. Okay, so this one pushes back up. This is now confusing a whole heap of traders because they're probably thinking this high of the initial day has now been broken, and chances are this will probably continue going up. Well, market makers pretty much saying no, it's not going up. We're going to do this. We're going to pull back, and then guess what? A lot of traders see this and this. They'll be saying, okay, market's reversing now. We're going to take short orders. All right, so market doesn't bounce back. Market goes back up here and then hits all the stop orders again before it starts to come down. Okay, comes down. This is another a false move by the market maker. Again, it's hitting all the stops here for all the traders. So this one I probably would not have traded. But if you have a bigger picture of what's going on here, then what you would know is that market has climbed up somewhat over the course of 2 sessions, London and New York. Let's see what the climb was from here to about here. Okay, that's about 77 pips over two sessions. Okay, chances are the market's not going to move up any higher. So what you're looking for is if you're seeing this happen, um, actually what you could do, this is the start of the Asian session there. If you see this sort of behavior and this goes and hits this point up again, sure, you can look at seeing if you can do maybe a put trade somewhere around here. When you see the market pull back up again, it's retesting this. If that's done but doesn't break it, then chances are the market's going to reverse. Okay, the risk in trading binary options here, 15 minutes is great if you're trading on the candle, especially just on the reversal. Anything more than 15 minutes is a bit of a risk, simply because you may be able to call the trade, the direction of it, and this is what I'm testing around this week right now, and I'll be carrying that forth into next week. But see how here, if you see this and you say, okay, I want to ride that whole trend down, if it's going to come down, and you say I'm going to put in a trade for maybe about 2 hours or so, notice this, you'd probably enter the trade on this candle here, this green one. So we're talking 1, 2, 3, 4, that's 1 hour, and then 1, 2, 3, 4. Notice how you would have just come close to losing that trade, because by the end of the second hour, this candle's gone up. If this would have ended up here somewhere, you would have lost that trade. So here's the thing that I'd suggest that you guys do as well, testing wise. See if you can trade the singular candle that you have enough trust that that's going to head back down, or you can do possibly a 30-minute trade. So do some testing along those lines. But regardless of what I've just suggested, look for these areas where you know that the market makers will no longer push back up, okay, against, because one, they've already made their move. Two, that there's possibly a lot of traders that are stuck up here, and the market maker is now looking to stop people out. Notice over here as well, market maker consolidated for the majority of the New York session. So what this means is that A lot of people, and especially when you see these things happen, you know that the market maker is going to go in the opposing direction, because there's a lot of people up here that are stuck. They're not going to go back up here to free people out of their orders. So, and especially when you see this sort of behavior happen, what you start to think about is this, that this is possibly a false move up again to try and trap some traders, right? When you then start seeing some of this happening, you know that the market is about to head down at some stage, right? Binary options wise, we don't know when. Forex wise, we know it's coming down, so you could possibly easily write that. But for binary options, you don't know when. That's when you're looking for these points where you can trade a comfortable reversal, right? Remember I said to you, search for patterns. Look at this. This is an M within a bigger M. Right, so look for that. Look for these shoulders, meaning to say, when you see this climb, it hits up, comes back down. Remember the whole idea of double tops? You consider this a double top. So if you see, for example, this happen, and then you see that doji there, you could draw in your reversal, your resistance line here somewhere. If you see this happen and you see one pulling up as well, chances are this is not going to be broken. This is a second part of an M there, and then that's going to hit back down again. So chance you could do one or two, especially if this is the second leg of an M or a W. You might get the potential of one trade down and a secondary one as well. You probably won't have too many instances where this will come down and then go back up again and come down. Okay, so look for those sorts of trades. Keep in mind, if you're doing trading over a 24-hour period, you're only looking for maybe 2 or 3 good trades. Don't overdo it. That's where a lot of people go wrong. Keep in mind the bigger overall picture. You know, when you're looking at, say, London do this, and then go into New York, and New York hasn't made any major moves, uh, then you know that this major move has to be made in the Asian session at some point. Okay, look for the bigger pictures and see. Notice how this one, it started to peak towards the end of New York, climbed up, and market maker just said, "Look, we're not going to play around too much here. We're just going to hit it." Okay, if you get a longer term expiry, fantastic, certainly do that. Most brokers won't offer you that. And for those of you that are trading Nadex, use this information. Take longer term trades if they're available. Okay, so go jump on your chart, zoom out, have a look at these points. These points when market has peaked straight after a trend. Draw in your support resistance lines. Know the reasons why the market maker will not go back, hit past that point, especially when you're seeing clearly these patterns happening. So if you're seeing this after a trend, the only thing the market maker is going to do is a W. It's not going to form an M here, simply because unless it wants to carry the market down for another 50, 100 pips, which chances are with this sort of a fall, it possibly won't happen. Look for where the market starts to range, and that range is going to establish where you can draw in your support resistance lines and trade the reversals. Okay, again guys, don't try and do too much. Look across multiple currency pairs. Look at this W pattern right here. Notice how this came after a trend. You're not going to be trading this one. This is actually going to create the initial hit. Let this do its thing, go up, come back down again. You've seen this fall. You know this is possibly not going to fall past this point, because this major fall has already happened. It's unlikely that the market is going to do 2 major falls in the same session. Okay, so you see this major fall coming down just prior to the New York session. You're not going to see maybe another continuous fall like this in New York. It's highly unlikely. I'm sure more experienced traders might have seen that, but it's highly unlikely this is going to happen. So when you take this picture into account, this is Asian session, London session does its one major move, and if the London session has done its one major move, what you're going to see is some degree of consolidation, multiple points hit, and then the bounce backs happen. Okay, see if you can catch the second hit to it and take the bounce back. The other thing that I wanted to mention to you guys before I turn this off, if you're trading full sessions on 15-minute charts, what I want you to do is look at the 2 points, one up the top and one at the bottom, where the market tends to hit every session. So, for example, here's the Euro USD pair. See down here where the market's come and hit. It's hit it twice. That's the New York low. And then it does come up and hit a high somewhere up there. And each high and low tends to be a spike. Okay, you're looking for pin bars, big pin bars. Here's this one here. That's a massive one. This gives you a key indication of where this is going to go. This is an M, comes down. Right, market's been falling throughout the previous London session. Market went up again and it fell again during the New York session. Chances are it's not going to continue falling in the Asian session. So what's going to happen? Market is going to most likely reverse in that direction. You see this sort of pin bar, it's hit its daily low and it's going up for a high somewhere. At some point it will issue another pin bar and start to fall. This one, why the market rose up again, the market makers wanted to hit London quickly. So if you start seeing climbing instead of consolidation happening prior to one session, that means something is about to happen. Okay, so like I said here, if you see this consolidation is normal, right? This is what normally happens. You won't see too often where one fall continues on down. So if this was a consolidation here, I'd wait to see signs of where the market would have possibly gone up and then come down with the London session here. But in this case, notice how in the last few hours of the Asian session, market started to climb straight away, issued a bit of a pin bar, and then pushed back down again. All right, so pay attention to some of those things right now. Look at this. This is London session right now. Okay, notice how market went up, market climbed through the Asian session. It's issued its pin bar, or it's going to finish in about two or so minutes. Chances are this is an indication market is going to start falling. Okay, so I'm about to go out to dinner, so I'm going to miss this one. For those of you that are watching, jump onto your charts and have a keen eye on what the market is doing throughout the London session and New York session. I have a feeling that the New York session is the day is going to end with a downtrend, simply because the market's been downtrending. Well, if we jump onto a 1 hour chart and zoom out, it's been downtrending for the majority of the week. So chances are this will possibly fall down. You might get a bit of a climb with New York and then another correction somewhere down here. Okay. Alright guys, all the best. There's a lot to soak in, but I'd recommend that you guys jump on your 15 minutes charts, print out your daily patterns on them and study them like a hawk. That will help you with your binary trades. Start understanding this more in terms of Forex. It will help you with your binary trades. What else was there? But just be careful of what you do in terms of trading timelines, duration of trades, meaning. Okay, so all right, guys, I'm going to head off now. Keep an eye on these. It's the same things happening on AUD USD. Let me have a look at USD JPY on a 15-minute chart. What's that's doing? No, that's jumping up. Euro JPY. Okay, Euro JPY is going up. USD JPY is going up. Euro USD has issued or is issuing a pin bar. AUD JPY. This is going to be an interesting session for London. Notice how the major moves already been made with the start of the Asian session. Okay, major move. Okay, flat, major move. All right, so keep an eye on that one. See how you guys go. Alrighty, see ya.